So today I'm in downtown Tiburon and I have my whole family with me here.
Hi, everybody.
My wife Lizzie, my mom, my sister Sarah, and my little nephew Gunny, who's about to maybe take a nap. So they're gonna be behind me intermittently in the video. I'll take off and let them do their thing while I take the video here. Okay, so a couple weeks ago, I made a video talking about solar panels and how a lot of people are regretting putting the solar panels on their house. And something really tragic just happened recently that one of my viewers, Tony, sent to me. And it's just like unbelievable that stuff like this happens, guys. And it's really one of the big warning signs and things you got to watch out for if you're somebody who's considering putting the solar panels on your house, okay? And what happened was there was this 78-year-old woman who was retired. She actually just died hours before this news story actually came out talking about her story. Unfortunately, she spent her final days all distressed and worried over a solar panel contract that she had signed back in October of 2024. And this is what happened. There was a lot of misleading sales tactics with her solar contract. There was a company called Solar Pros who allegedly misled this woman and told her that her solar panels would be free under a government program and that it would save her money. But in reality, the contract from the solar financing company Enfin required her to pay $138,000 over 25 years with her home as collateral. This is the exact type of thing that I was warning about in my solar panel video. And that's why a lot of people who have done it themselves have said that's the best way to do it, is to do it yourself, because you don't have to worry about stuff like this happening. You pay for the equipment, you install it yourself, and then it's all done. There's no financing, there's no hidden agreements or hidden contracts like in this case. But you approach someone elderly and it sounds like a good idea, and they get sold something like this, not knowing that they're basically putting this giant lien on their house. So the family of this woman who recently passed away spent the final days of her life trying to cancel the contract. And after enough public attention in this story hitting the media, the Enfin financing company agreed to cancel their contract. But the woman literally died just 5 hours before this news story aired. And I feel like this had a lot to do with it. You know, I mean, there's no proof of that, but coming under a tremendous amount of stress when you get older can really take a toll on anybody, and it can lead to tragic circumstances like this. So at least the contract was canceled and the lien is going to be removed from the home. But because of this story, it was enough to drum up enough turmoil, because this happened in Texas, by the way. And now they're going to have to look at regulating the solar panel industry because of it. So Texas decided to put a new law in place regarding solar panels starting on September 1st of 2025 that prohibits misleading and deceptive sales tactics. It's also going to ban soliciting at homes with no soliciting signs on it. So everybody should have one of those signs up if you don't want people coming by trying to sell you stuff door to door. It also increases the fines and violations, especially if it involves people who are senior citizens, 65 years and older. And it also allows customers to cancel contracts within 5 business days. And it also gives the Texas Department of Licensing and Regulation authority to void contracts and issue refunds. And it requires solar salespeople and retailers to register with the state starting next year. So at least this is a start to a point where hopefully stuff like this won't happen again. But you know, there's always going to be people trying to take advantage of everybody else. So if you are somebody who is going to get solar panels, you need to be extra careful, guys. These new rules and regulations I just outlined only apply in the state of Texas. I have no idea what the rules and regulations are in other parts of the country, but you need to be diligent. You need to make sure you're not getting scammed when you sign up for one of these things. And especially if they're putting a lien on your house, if you're going to have large payments and owe these people a lot of money, that's already a huge red flag right there. That is probably not a good idea. And it's also probably not a good idea in general to buy a house right now either, because one thing that I've been talking about for a while is how expensive homeowners insurance is becoming for basically everybody. And it's getting to a point now where homeowners insurance is costing so much that some people cannot pay their mortgages because of it. And it's causing delinquencies on mortgages to rise, specifically FHA delinquencies. Those have been on the rise substantially since the homeowners insurance premiums have started to go up. But here's a real life example here right out of California. This is not an FHA delinquency, but just an example of an increase. Here's a guy whose property insurance went up from $7,000 a year, which is already a ton, to $12,000 a year. This guy has a home in the Sierra Nevada mountains close to Yosemite National Park here in California, and he's on the FAIR plan, which is already the California's version of Citizens in Florida, and it's the insurance company of last resort. And this is the premium this guy is paying. Now, this guy is lucky that he can actually afford these premiums. Obviously, he's probably doing well if he can afford $12,000 a year just for homeowners insurance. But that's not the case for everybody, obviously. And this should be a big consideration for just about everybody, because think about this. Even if an aspiring homeowner can actually qualify for a mortgage, a lot of people are finding themselves in a situation now where they can't actually go through with the home purchase because they are unable to obtain the required insurance due to the high costs. Yeah, you can afford the mortgage. Yeah, you get qualified for the mortgage, but once you get a quote for the homeowner's insurance, it adds such a high amount to your monthly payment that now suddenly that monthly payment is no longer affordable and you can't buy the house. This is becoming more and more of a common thing that you're seeing right now. Now, homeowners insurance have jumped at least 20% between 2022 and 2024, and it's projected that homeowners insurance is going to go up an additional 8% on average for people here in 2025. And the average homeowner is expected to pay an extra $261 a year on homeowners insurance premiums this year. And for people who are well-to-do, this is nothing but a minor burden. But for other people, it can make the difference between being able to afford their mortgage anymore or not, which is why I tell people that if your margins are that razor thin, then you shouldn't even own a house to begin with. And that brings me to the problems, particularly with FHA borrowers and people who use very low down payment mortgage programs to get into a house. They are the most vulnerable when it comes to these increases. The national mortgage delinquency rate was up 16 basis points from a year ago to 3.2% as of May of 2025. And most of that increase in delinquency was due to missed payments on FHA loans, according to the most recently available data from ICE. And the housing counselors that work for the U.S. Department of Housing and Urban Development have been saying that they're seeing more phone calls from FHA borrowers who are struggling to make their mortgage payments because of surging insurance premiums and home repair costs. These are things that I have warned about on this channel countless number of times, basically telling you that if you are already on the thin margin, if you already can barely afford the down payment and you're using up all your cash to be able to buy the house, and those monthly payments are already reaching your maximum limit of what you can afford, you just shouldn't buy, guys. It's just not a smart financial decision. I know people want to get on the property ladder and own a home and not rent anymore, but I'm telling you, if your margins are that razor thin, all it takes is one increase like this from your homeowner's insurance. Imagine if you were the guy from the beginning of the story where it basically doubled in 1 year. I mean, what would you do then? You would be in a situation where you would be forced to sell your house, probably for a loss, and you're going to be in a worse situation than you were before you actually owned a house. And this delinquency in FHA loans has been so severe in the Fort Myers area of Florida that it seems like things are kind of similar to the subprime mortgage crisis we had back in 2008. Back then it was adjustable rate mortgages and risky lending practices that led to all these delinquencies. Well, now it's the increased cost of homeownership that no one saw coming that is increasing the delinquencies. And the government is getting back into the risky lending business like I talked about the other day. They're going to be making it possible for lenders to use the Vantage score instead of just the FICO score to give out loans. And the Vantage scores are typically higher, and people who are younger and don't have much of a credit history can still have a high Vantage score, which is probably going to lead to even more defaults in the next coming years. Some people in Florida are seeing their insurance premiums go from $1,500 a year to $7,000 a year. So imagine you just bought a house and this happens to you. What do you do? And you know, the average household income is less than $80,000 a year, guys. So these increases are just unsustainable for a lot of people. So I'm not telling people you shouldn't buy a house. I'm just saying if you do, you need to be 100% sure that you are financially ready and financially viable and you can handle the responsibility, because it is going to add up. Like the FHA borrowers, for example, they're particularly vulnerable because they have lower credit scores. You can qualify for an FHA loan with a credit score, I think, as low as 580, or maybe if it's even 540. I forget what it is, but it's very low. And then they have high debt to income ratios. You can get an FHA loan sometimes with almost a 50% debt to income ratio, depending on the lender, depending on the situation. And they usually have minimal savings or sometimes none at all. You know, often less than 1 month's worth of expenses saved up in the bank for a rainy day. So you're not ready. If that's you, you just aren't. I know that's not what people want to hear, but I don't tell people what they want to hear on this channel. I tell you the truth. And the research points to the fact that when you see insurance premiums go up, so do mortgage delinquencies. There was a study from the Dallas Fed that found a strong correlation between higher insurance premiums and increased mortgage delinquencies, especially from FHA borrowers. And the defaults often result from upfront financial vulnerability, not just premium increases, according to the research, which means that because your finances weren't rock solid when you became a homeowner right from the beginning, you are much more vulnerable to any sort of problem with being able to afford your house down the road. Any financial hiccup can make it become unaffordable. And the worst part is, guys, is all of this is preventable. If you just wait until you have more money saved and you wait until you have a more stable income and a higher income, a lot of these problems can be avoided. But most people just want to jump headfirst into homeownership because of FOMO or because their real estate agent convinces them that's the best thing to do. Take a look at this. 80% of first-time homeowners with an FHA loan have less than 1 month's worth of savings to cover their mortgage if they suddenly find themselves without a job or face a sudden medical emergency. What are the odds that that's going to happen? Probably pretty high, especially in this economy right now. You've heard me talk about all the layoffs and all the problems that are happening with that. It's just a matter of time before this could happen to a lot of people out there. So if we see insurance premiums continue to rise, which is very likely, they're talking another 8% rise just this year without the corresponding increase in incomes, well, the delinquencies are probably going to continue to rise in the coming months and years as more people are being squeezed out of being able to afford their home. That's what's happening right now. And this kind of brings me to an interesting point that I want to mention here that doesn't really have anything to do with real estate, but more about money and people's net worth and how much money is worth these days. Oh, and a quick comment on that is I saw some comments the other day in my video talking about how wages haven't kept up with inflation, that tariffs don't cause inflation. It's the rise in money supply that causes inflation, which I totally understand that. And I also understand that we have increased our money supply by about $6 trillion since 2020. So all the inflation that we're seeing now is being perpetuated by that increase in money supply. And the tariffs amplify the issue by making everything more expensive. But anyways, you might think it's a good thing to hear that America is producing more and more millionaires. But being a millionaire is not what it used to be. According to a recent report from investment bank UBS, they found 379,000 Americans became new millionaires in 2024, which is over 1,000 per day. So that might sound great, like, wow, more and more people are getting wealthier. So how can everything be so bad, Michael? Because that brings the total number of millionaires to just under 24 million, which is more than any other country in the world. But most of these millionaires are what's called an everyday millionaire, people that have a diverse group of assets valued between $1 and $5 million. That's largely due to the fact that they just own the right assets that have caused them to become millionaires. And for most of these people who are becoming millionaires, it's just a matter of sticking to a financial plan of saving and investing over many, many years that has brought them to the point where they're now millionaires. And according to the UBS report, they found that the biggest catalyst for people becoming millionaires has been real estate values, because in the US, median home prices have risen over 150% since the start of the century. So since the year 2000, prices are up 150%. Also, there's been an outsized impact on the stock market, and people's net worth is tied to that. Basically, when the stock market rises sharply, a lot of US households become millionaires because of the appreciation in their retirement portfolios. And at the same token, when there's a sudden downturn, a lot of people can just as easily lose their millionaire status as well. And the reason why I wanted to bring this up is because I was just talking a little bit ago about how you don't want to buy a house until you're more ready financially and you have some more substantial savings and a better income and things like that. Well, even being a millionaire these days is not what it used to be, guys. In fact, the math on this is completely sobering. Take a look at this here. They say in this report that a household that has $1 million in 2025 has the same buying power of a household that had only $165,000 back in 1975. That is just absolutely pathetic. So $1 million has lost almost 90% of its purchasing power since 1975. This is how much we're being ripped off by inflation and the dollar losing value. Which also means that if you had $1 million back in 1975, you really were rich. You really had something. Like having $1 million made you ultra wealthy back in the day. So I just thought that was an interesting tangent to go on and explore for a minute, just to show how kind of worthless $1 million actually is today. I'm not saying everybody wouldn't be lucky to have an extra $1 million. I'm just saying it doesn't go as far as it used to. Also, something interesting that was sent to me regarding rent prices, but since last year, rent prices in the city of San Diego have gone up about 10%. And that's why in San Diego, they held their first ever roommate speed dating event in the city to help renters find their perfect match. Just like you would do speed dating in order to find a partner back in the day. Now they're starting to try this with roommates because it's getting so bad and getting so expensive. Actually, I don't think it's really that bad of an idea either, because it gives you a chance to meet a lot of people all at once and kind of consider who would be the most ideal roommate for the situation and setup that you're looking for. And it turns out more than 100 people actually signed up for this event, and a lot of people are looking forward to it and are excited to attend. But the reason I'm bringing this up is because it's becoming more and more common for people to need roommates, especially in places like San Diego, as the cost of living continues to creep up. You know, having a roommate might have been optional before, but now it's becoming mandatory for a lot of tenants. And the situation's pretty dire over there, because according to the data, they say that about 135,000 renters throughout San Diego County do not have access to affordable homes. They don't have a housing shortage there. There's plenty of homes available for sale and for rent, but not many that people can actually afford, which is kind of like the situation almost everywhere right now. Renters in San Diego County need to earn about $8,300 a month on average in order to afford the asking rent in San Diego County, and likely to be able to be approved as well, because remember, a lot of landlords want to see that you earn 3 times the monthly rent to get approved to rent anything. So I just thought that was interesting for a lot of reasons. You know, it's kind of sad that it's come to this where people need to do things like this just to be able to afford a place to live. But at the same time, it's cool that there's some innovations happening out there and some new ideas being brought to the table to help people find the ideal roommate situation, because if you already don't want to have a roommate, but at least if you're able to find a great one because of something like this, then I think it's kind of cool. Watch out for those solar panel scams, guys. They are alive and well. Do not buy a house unless you are 100% financially ready and you have a 6-month emergency fund after buying the house, after paying the closing costs, all that stuff, and your income is rock solid. Then you're ready. If you don't have those things, you are not ready. Keep working towards the goal and eventually it will happen. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.